Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of April 8th through April 12th, where we'll see how to make money even though there's April showers in the market. We'll look at the forecast for April showers in the market and again, try to help you make money trading even if there are April showers in the market. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of April 8th through April 12th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in our description box below. Our notes documents contain links to bonus videos, the tools and resources we use for our market analysis, our trading strategies, trade ideas. We keep all of our notes documents in a publicly accessible Google Drive folder so you can refer back to the notes for this week as well as the notes for our previous weekly trading game plans in that publicly accessible Google Drive folder in the description box below as well. So first we'll look at how the markets ended up on Friday. We'll go to the profile of main page of FinBiz. So we can see markets, had a rebound or an exuberant run after the slight April shower we had on Thursday, and we'll talk about the potential causes of that brief April shower on Thursday. But again, strong rebound on Friday, Dow up 0.8%, NASDAQ up 1.2%, S&P up 1.1%. So we had 58% advancers, 37% decliners, 54% new highs, 46% new lows. Got 57% above their 50-day moving average, 42% below, and 66 above their 200-day moving average, 33% below. So a slight decrease in the stocks above their 50-day and 200-day moving averages this week. So we see a slightly bullish heat map, again, rotation back into the Magnificent Seven with the exclusion of Tesla. We can talk about some of the news that caused the drop in Tesla, but again, a major rebound in the Magnificent Seven, mega cap tech. Again, those are viewed as a kind of a safety trade as well. Virtually all sectors were green, and we'll look at the sector performance and the group performance in a few minutes. Welcome, MD, Gerald Fitz, Ricky Khan. Thank you all for joining us today. Alan Krantz, hope you all are doing well. Hope you had a good trading week. So if we look at some of the news, our best markets for home buyers, latest threat to stock market rally, fear of geopolitical risks. Okay, so again, we'll talk about some of the geopolitical risks, increased risk of further conflict in the Middle East and the impact that had on the oil prices. U.S. Lofty valuations in spotlight as earnings season nears. We'll talk about the start of earnings season again this week. Market swing dominated as hot economy, oil fed anxiety. So again, we'll talk about the jobs data that we got this week as well. Indexes rise with losses after jobs data. Dow closes higher in Friday rebound, but registers worst week in 2024. So again, even though the Dow bounced up, this was its worst week so far in 2024. So again, we saw oil surge up over 87. So again, increased geopolitical risks in the Gulf caused a big surge in oil. Natural gas been kind of oscillating, slowly creeping up to retest that $2. We'll see that in the futures. Huge surge in gold. Gold broke through the 2,300 mark. Looks like it's going to test the 2,350 mark. We'll see if that provides resistance, and if not, if it surges through 2,350, the sky's the limit, although I've heard projections as high as 2,600. We can see all the indice futures are currently strongly pointing up. Treasuries, and we'll talk about this as one of the trade strategies, trade ideas that we'll talk about in our trade strategies at the end, but there seems to be a no longer a correlation between bond yields, the TLT, and stock prices, because we saw bond yields 30 years now over 4.5, 10 years almost 4.4, and yet stocks surged upwards. So again, seems to be a breakdown in that correlation between bond yields and stock prices. Also, there seems to be a breakdown between the correlation, inverse correlation between the US dollar and dollar denominated commodities. And again, I'll reiterate that at the end. So we did see the US dollar versus yen break down a little bit from that 152 level, but it looks like, a bottom. We'll see that again also in the futures. Welcome, Easy Mike. Hope you're doing well. Thank you for joining us. So next we'll look at some of the major indices. So we'll look at the Dow, S&P, and again, you can access these quick links to these screeners, both for the major indices and the technology components in our notes, and also in the screener sheets in our ETFs and Watchlist Google Sheets. So we look at all the indices. Again, we saw that, brief April shower in Thursday based on the jobs data and also some comments by some of the Fed officials that we might not get the cuts that the market was expecting, the interest rate Fed cuts that the market was expecting this year. So we saw, again, the Dow dropped, had its worst week. It's broken down below its moving average, so it's kind of oscillating around that moving average. So it looks like it's got some support there, but again, looks like it's traveling laterally. If it does break down further, we could see further significant downside. IWM, again, it's following this lower trend line, still got some room above its moving average, but again, if we're not going to get rate cuts, that's bad for small caps, bad for IWM. Q, again, looks like it's mostly flat. It did get some support from that moving average, but it did break down below that channel. So now that upper or that lower channel trend line will provide some resistance. But again, mostly flat. Did get some support at the previous low at the moving average. But again, I just expect oscillation. And we're getting more volatility, so more violent oscillations. But again, Q traveling pretty much flat. S&P also broke out of its channel. It's got more room above its moving average, so we might see some further slow downside in the SPY. And again, this channel lower trend line now will provide a level of resistance. I expect support from that moving average when those converge. So I hope that helps. We look at the technology components. So we see, ARC kind of broken down below its moving average and pretty weak. Looks like it's got further downside. So it's been, mostly flat, trending down. And again, we might see further downside in ARC-K, test that previous low, test the moving average. FANG-U, the FANG stocks continue to be strong. Again, the buy the dippers and the Magnificent Seven and the FANG stocks, always, they're relentless. They come back. So as soon as the FANG stocks dip, you've got to buy the dippers and it bounces back up. So it's hugging that lower support trend line pretty closely. Got support from the moving average. We see it tested that briefly and then bounced up. So again, I expect this to travel laterally, just bounce and oscillate between those trend lines, but plenty of support in the FANGs. Not so in biotechs. Again, biotechs broke down significantly, got support from that longer term moving average, bounced back up a little bit. But again, if it breaks down below that moving average, more downside in biotechs. Plenty of support in semiconductors, due to AMD, Micron, NVIDIA. But we can see now we've got a formation of a wedge, a narrowing triangle forming on semiconductors. So again, I expect just, chop oscillation in that narrowing wedge. Qs again flat, broke down below the moving average. Got support, from the previous low. So again, now traveling laterally. You see the change in the trajectory of those channels slowing down, so it's flattening out. We see the broad technology. We see now a double top forming, so it's testing that double top resistance line, bouncing off. It did break down below the channel as well as the moving average, so it did get support from the previous low. So again, I expect lateral chop, and we could get a correction, down to the 70 level in the broad technology sector. We'll see we're getting a rotation out of technology into things like energy. So in a second, we'll look at the groups and the industries as well. Let me grab a quick drink. Thank you for sharing those, Easy Mike. So we're showing the top 5 inflows and the top 5 outflows of the ETFs. Again, it'd be great if you'd post those in our Discord. Really appreciate it. So we see Qs, VOO, AGG, TLT. So TLT is bonds, outflows, SPY, LQD. And again, we'll look at our ETFs in a little bit. So outflow out of gold, out of Dow, out of Bitcoin. Okay, so let's look at the groups and the industries and see the sector rotation. So again, we did see a rebound on Friday in technology, communication services. So again, led by the Magnificent Seven. Again, the next sectors, industrials, basic materials, energy, weakest utilities. So again, Thursday we'll see we got a risk-off move due to those April showers. And then Friday we get a rebound back into the risk-on moves. But for the week, we see energy strongest, some communication services, basic materials. So we'll see again silver and gold pretty strong, and industrials pretty neutral. Weakest real estate, defensives, healthcare, utilities. For the month, again, energy, basic materials, again, communication services been strong. But again, when we've been talking about this expected rotation back into energy for quite some time, and now we're seeing it this month. Again, oil's up in the 86, 87 range, probably test 90 at some point. Again, the weakest sectors, real estate and healthcare. So real estate, bond yield sensitive, and if we're not going to get cuts, that's also bad for real estate. So for the quarter, real estate's been the weakest. So once we do get rate cuts, I would expect a pretty healthy rebound in real estate. Look at the industries. So again, silver, gold, very strong. Solar had a rebound. Again, oil, natural gas, mostly oil. Semiconductors rebound. Again, the weakest for Friday, so solar, so the renewable outside of solar had a rebound. Utilities weak, autos, so that's probably, partially Tesla. So for the week, again, silver, gold, uranium. Again, uranium continues to be relatively strong. We're seeing some minor corrections and then rebounds in uranium. Copper had a rebound, again, oil. Farm products look like they're moving up. I saw Easy Mike mentioning DBA. Welcome, Ricky Khan. Thank you for joining us. Hope you're doing well. So for the week, again, solar pretty negative. REITs, office REITs. Again, that probably contributes to the weakness in real estate. Coking coal, I've been looking at this one and looking for opportunities here. I'm going to pop this up just to I've been taking a look at AREC. We've watched that before. It's been kind of oscillating right now. It looks like Archer broke down, but I'm kind of watching AREC as a potential future opportunity as oil prices go up. I expect we might get some more interest in coal. So METC looks like it's breaking down from its head and shoulders. So again, coking coal is one that I've been starting to keep an eye on, particularly with the rising oil prices. So again, for the month, silver, gold, copper, uranium, oil. So again, basic materials and energy for the month. Again, we see coking coal at the bottom. So again, this is what's triggering my interest to see a rotation back into coking coal. Thermal coal's down there too. Retail, discount stores, weak, poor. One of the discounters is closing a lot of their stores. I heard a 99-cent store is closing all their stores, I think, in the south. So again, for the quarter, silver, we'll see. We're finally, in my humble opinion, getting that catch-up trade with silver. So silver strong, copper, uranium, oil. And again, coal been weak, solar relatively weak, and office REITs. So again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So now we'll look at the economic data we got last week, look at the economic data that we've got coming up this week. Just a quick reminder, as soon as this important economic data comes out, I try to capture it, post it in the Surf the Markets channel in our Discord. So we'd welcome and encourage you to join our Discord. Our Discord's free to join. Again, I try to post this economic data as quickly as possible in the Surf the Markets channel in our Discord, so you can see, take a screenshot out of investing.com, post the raw data. Also, as important news comes out, so here's the Tesla news. First, it was posted, I guess Reuters posted a news article that Tesla was scrapping its low-cost car plans, and tomorrow we'll look at TSLY, and this caused a significant drop in Tesla. And then not long after that, Elon Musk came out on X and said that Reuters report was false, and we saw a slight rebound, but not a complete rebound in Tesla. So again, we'll talk about this in more detail tomorrow, but that's one we'll be keeping an eye on is TSLY, which is the yield max on Tesla. So just some of my notes of the important and interpretation of some of the important economic data we got last week. Not much Monday, Tuesday, Wednesday, but Thursday and Friday we got jobs data. So Thursday we got job cuts, so more job cuts than expected, more initial claims than expected, but the continuing claims is decreasing. So what that tells me is there are layoffs and there are more people starting to claim unemployment, but people are continuing to find jobs because the continuing claims is going down, and also the weekly average, is pretty steady. So trade imbalance was worse than expected. That doesn't seem to move the markets a lot. So in part, this strong jobs data pushed off the market's expectations for rate cuts. And then also we had Kashkari, which is one of the Fed presidents, come out late in the day and say maybe we'll get no cuts. He said, I guess he was predicting 2 previously, but they might get no rate cuts. And as we saw, the market reacted pretty negatively on Thursday. So we definitely got a April shower on Thursday. We saw the market swing from like a 1% up to a 1% down. So again, we're seeing increased volatility, and people are, attuned to these comments by the Fed officials. So as they dial back their predictions that, well, maybe the Fed might not cut as soon, maybe they might not cut at all, again, the market reacts negatively to that. Again, Friday, we got our non-farm payroll jobs data. We see average hourly earnings steady, hourly earnings for year on year steady. The overall non-farm payrolls was much higher than expected. So again, the job market's very strong, creating jobs. People are able, even though there's more layoffs, etc. There's other jobs people are able to find. So the job market continues to be strong, resilient. The unemployment rate is steady. The U6 was steady, and the actual unemployment rate actually went down. So again, Fed doesn't have any need to have no concern over unemployment running, rampant, and so therefore they can fight inflation, which means they can not cut and leave higher for longer, which is what we've been saying for a very long time. And I guess now the talking heads, etc., are saying that the market's pushing rate cut projections out to September from June. So again, in my humble opinion, that might be an overreaction going the other way. I still, in my humble opinion, I think we'll get one June, July, assuming that the inflation data cools down. If not, maybe they won't cut this year. And maybe at the end, I'll talk about people that may not want rate cuts and why that might be the case. So quickly go through some of the other economic data we got last week. So we got some manufacturing, pretty steady, a little improvement in manufacturing. So again, the economy's, resilient. See no weakness really, no fear of recession. Factory orders are better than expected. JOLTS, so job openings, again, it was pretty much in line with expectations, a little increase from last time. So again, plenty of open jobs. That supply demand isn't really balancing out yet. Vehicle sales a little weaker than expected. Mortgage rates relatively steady. We talked about ADP non-farm payrolls, also better than expected. So again, job markets resilient. ISM non-manufacturing, a little weaker than expectations, but still above 50%. Crude oil inventories are up, but again, the conflicts in the Gulf causing oil prices to go up. Got all these Fed officials talking, so I don't know if you heard the discussion with Chair Powell, but he pretty much reiterated his standard message. Going to be data dependent. They got to fight inflation. No rush to cuts, but he does expect cuts. So again, same message we keep hearing. So nothing really new there. Talked about job cuts data and the jobless claims data. Natural gas storage was down less than expected, but again, natural gas prices have just been kind of oscillating between, 150 and 2, more 170-ish lately. Again, all the Fed officials talking, and again, these the market seems to be more sensitive to what these Fed officials are saying than in the past, so it's causing a little more volatility. Again, even though that's just their opinion right now. Talked about non-farm payrolls. Baker Hughes, so this is interesting. So we've seen a little bit of a bump up in oil rig count. Total rig count's pretty steady. So again, oil prices are up. I would expect this rig count to continue to go slowly upward. Okay, economic data for next week. Again, more Fed officials. There's Kashkari again, so that might cause some volatility. He's the one that said, no cuts and caused the drop, or part of the reason for the drop on Thursday, along with the global conflicts in the Middle East, mortgage rates. So we get CPI on Wednesday, core CPI. So that's going to be an important one, an important inflation measure. And if that comes out higher than expected, I would expect a drop in the markets. But again, the Fed's not going to cut, and they've even talked about the small probability of a rate increase if inflation's not meeting their 2% target, and they're not willing to even consider changing their 2% target. So it's 2%, and Powell restated that in his meeting as well. So we get Fed meeting minutes. Again, I don't expect anything new coming out of that, but a lot of people will be watching for any indication, any further data that as to when a cut's going to be. So again, everybody's pretty focused on Fed rate cuts right now. So that could cause some volatility as well. Then Thursday, get PPI. So again, important inflation data, core PPI. Again, very important to the Fed, and jobs claims. So we've got some pretty significant volatility events throughout the week. So we'll see if we get a further increase in volatility. We did see the VIX, I think it popped up into the 16s and then dropped back in below 16. So again, volatility slowly increasing. We also get Michigan sentiment on Friday. And again, that if their inflation expectations are not coming down, again, reasons for the Fed not to cut. And I don't think they're going to raise, but the fear of a raise will probably creep in. Let me grab a quick drink. We'll look at the earnings calendar here as well. Got the kickoff of earnings again, end of next week. So again, you can see the whole earnings calendar in investing.com, and then the abbreviated version also in Webull, as we'll see in a minute. Again, I think the financials, the major earnings will come at the end of the week when the financials report, but we can see, okay, we got, Tilray, we've got some others reporting. So cannabis has run up. Here in Florida, they're putting recreational cannabis on the ballot in November. So I kind of expect that will probably pass. I could be wrong, but I think that probably will pass here in Florida. And we saw a surge in the cannabis stocks and ETFs based on that news, as well as Germany legalizing recreational as well. So Wednesday, some agricultural, some miners. Thursday, some tech, Fastenal, etc. Some gold miners. And then Friday, we get the kickoff of the main earnings season with the big banks. So J.P. Morgan, Wells Fargo, BlackRock, Citigroup. So again, volatility in the financial sector. And people will be listening for the risk to commercial real estate, particularly with Wells Fargo and also I think Bank of America. I don't think Morgan. These are going to be more investment related, so not a lot of risk to commercial real estate. Citigroup will want to listen for default rates. So, is the consumer starting to default on their credit cards? If that default rate starts going up, then again, that would cause significant risk to anyone that's doing commercial or consumer loans, your buy now pay laters, your credit cards, etc. So I think we're going to start seeing an increase in default rates slowly. I think I heard auto loan defaults are increasing slightly. So again, you can see the Friday is going to be the main kickoff for the next earnings season. Then we go into a whole nother cycle again. So you can keep an eye on their earnings calendar at investing.com. We'll also see it in a minute in Webull, and again, you can hear how we trade around earnings via our video on how to make money trading when earnings matter, and earnings definitely matter as well as future guidance. We can see companies, even if they beat on earnings, if they're giving weak guidance, they're going to be punished significantly, and just meeting earnings or slightly beating isn't really sufficient given the high valuations of many of these companies. So again, keep an ear out both for their earnings as well as their guidance. Quick reminder, the next FOMC meeting isn't until the end of April. So we'll get the next decision on May 1st, and there is no SEP, no dot plot at that time. So we won't, other than their commentary and their decision, we won't hear their projections for future rate cuts. Okay, so let me grab a quick drink and we'll jump over to Webull and look at the market screen quickly. Check the chat as well. Okay, I'm using the online browser version of Webull. Again, as you saw, you can still get up to 75 free fractional shares of stock by opening an account and funding it with 25K or more. If you fund it with less than 25K, you still get 20 free fractional shares of stock. Also, I'm still getting emails so that they're offering a matching of contributions to your IRA of up to 4.5%. So if you're not already using Webull, we would highly recommend that you take advantage of that opportunity, get your free fractional shares of stock, get your matching funds in your IRA contributions, and if you'd please use our affiliate link in the description box below. You can get all those benefits with Webull and also help support our BeachBum trading community, which we greatly appreciate. So here's the histogram from Friday. So again, we saw that rebound on Friday. So a large number of advancers, but the percentage of advance was very small. A very small number of significant advancers. Number of losers pretty small. And we see a traditional inflow into the NYSE early on Friday, outflow out of the NASDAQ. So again, more so than last week. So again, typical Friday, you see an outflow, probably again profit taking out of the NASDAQ. Again, you can see the near-term earnings calendar here in Webull in the calendar section. So you can keep an eye on who's reporting. There's that AHR we were watching. And that we expect, their earnings, their guidances, they came out pre-announced. It was poor, and they dropped significantly. So we'll want to hear if it's worse than they pre-announced, and also their guidance will be interesting. So listen for AHR. Maybe that's one we might want to watch again after they announce. Also, you can hear dividend, see the near-term dividend calendar. Let's look at the best performing industries for the week. So you see uranium's rebounded strong, oil, transports. Again, that might be partially due to the bridge collapse, people betting on companies that might, be participate in the rebuilding. Metals and mining pretty strong, and oil. Retail pretty weak. Software pretty mixed. Consumers pretty weak. Utilities, again, Utilities pretty negative. Again, utilities also need rate cuts. Utilities become more attractive with rate cuts. Surprisingly, aerospace and defense did get a bump on Thursday due to that increased uh, conflict in the Gulf, but for the week it was negative. So again, significant bounce on Thursday, but for the week negative. Look at the ETFs for last week, or for Friday, I mean. So up on the Dow, up on Qs, up on S&P, up on mid caps. So again, nice rebound on Thursday from the showers. So we had April showers on Thursday, and then on Friday the sun came back out and everything was fine. So Thursday, Kashkari and the Middle East rained on our parade, and then on Friday, sun came back out and is parade back on. So see all the up swings up on the Qs. We again did see an increase in volatility. So you see UVXY, VIXY, VXX, short on Bitcoin. So BITI is the short on Bitcoin. Up on small caps, up on the Russell on Friday. After, pretty negative correction due to, we're not going to get rate cuts as soon. Industrials, so pretty much everything on Friday was positive except for utilities, a little negativity in real estate and defensive. So again, Friday mostly a risk on day. Commodities, we'll see this grains, or that's probably carbon, green energy. We'll see this probably better in the futures. Private credit. So again, let's jump to the futures. So again, we see that major correction in the Dow. Everybody had and then a bounce. So again, our April showers on Thursday. Big correction, big swing from being positive like 1% to negative. So and then we got that rebound on Friday. So again, we'll see if we get a correction and retest to that bottom. That looks like a pretty good. They all got pretty good tweezer bottoms on Friday. So. And again, we can see, NASDAQ kind of bounced off that previous low. S&P pretty close to that previous low. So we'll see if we get a retest of that. Russell, again, a lot of volatility on Thursday, broke down below that low. So again, more weakness in the Russell, potential downside to retest this previous 2050 type area. Again, we saw the Nikkei roll over. So if you caught that swing in the Nikkei, we were watching the short on the Nikkei for before the swing. I didn't catch that one. I did catch the long in the yen. We'll see potential, pretty firm bottom in the yen. Also, the Euro stocks look like it rolled over. We'll see if we get a bounce retest. We didn't get as big a bounce in the Euro stocks. Maybe if we get a bounce back and retest that top, that short might be interesting. DAX finally rolled over, but I don't have an ETF to short the DAX. Again, we saw this increased volatility on Thursday, bounced up into the 16s, retraced back down, and now it's back up over slightly into the 16s. So we'll see if this increasing tension in the Gulf, as well as reduction in projection of cuts, causes further volatility. Again, we've got some, volatility causing economic data this week as well. Again, oil surged up, 87, could test 90, got support now at 85. Again, natural gas been pretty flat, hovering around the 175, 170 area. Got resistance at 2, support at about 152. But, other than chopping, it hasn't really gone anywhere. And we see this, super exuberant surge in gold. Again, I thought there was going to be more resistance. I thought we were going to get a rollover right around 2,300. Didn't happen, and it surged up. It looks like it's going to test 2,350. Again, might be some resistance at 2,350. If it surges up through 2,350, again, next would be probably 2,400. And then, onward to, potentially 2,600 people are talking about. So again, my humble opinion, I think we finally are seeing this catch-up trade in silver. So I think the opportunity is still in silver, but again, I kind of think we might get some resistance at 28. So it blew through 27 pretty good. Probably get some resistance at 28, and then again, if it surges back up, it could easily go to 30 or so. And again, we'll talk about the ETFs, the long, short, gold, silver. We'll quickly look at those again. Copper, very similar, although it does look like it's kind of gotten a top in copper. Platinum and palladium haven't really surged quite as much. Platinum oscillating, palladium pretty flat right now. A lot of the agricultural commodities, have rolled over and come down. So cattle, hogs is still high. Corn's been pretty flat. Oats, rolled over and trending down. Rough rice. So I was looking for some ETFs to specifically play these commodities, and I really couldn't find a specific ETF. So there is the DBA one that Easy Mike mentioned. That's a basket of a wide variety of commodities. But again, it's been kind of trending up. So we saw wheat had a rebound. I guess there was some locust type plagues or something Easy Mike was mentioning with wheat. So it did bounce up. Was pretty flat. Got to bounce up. So some more upside potential in wheat. Cocoa looks like it finally peaked out, rolled over. Probably consolidate at this point, as there's supply issues in West Africa with that. Coffee went nuts. So I think we have a long ETF on coffee. I don't know one to short. Sugar looks like it finally rolled over. And then again, the bonds were dumping until Thursday, and then they got a slight rebound on that risk off move on Thursday, and then continued the downward trend on Friday. So again, we're seeing bond yields up in the 4.5 area. So at some point, I think we'll have to see a bottom and swing back up. And again, that's going to be dependent on this rate cut decision, discussion that's continuing. Again, the dollar did surge a little bit up over 104 and then corrected and surged back up a little bit on Friday. So again, when we got the risk off move, dollar strengthened a bit and then weakened. I've been, again, watching these foreign currencies. We are now long the yen. We're using YCL. We'll talk about that tomorrow. But again, it looks like, it's forming a pretty good bottom. And there's potential of BOJ, Bank of Japan, intervention that would give us at least a small swing back up. So we're, again, scalping that swing back up in the yen using YCL. I've been looking at the other ETFs that we looked at last week on some of these other foreign currencies, and the ETF, the risk reward on the ETFs just isn't that exciting. So maybe if you're a Forex trader, it looks like, there's several opportunities where some of these are bottoming and swinging back up. Looks like the Aussie already did. The Kiwi, the Aussie. Looks like the Swiss francs swing back up. Canadian dollar looks like it needs a bounce. So again, I don't know how many Forex traders we have around, but again, we do have a channel in our Discord and to talk Forex. So I'd love to hear others' opinions and how many people we have trading Forex directly. We also have futures and options, etc. So whatever your asset classes you trade, you can find a group of traders and discuss the various topics for trading those asset classes in our Discord. So, okay, let me grab a quick drink and we'll go through the ETFs, looking at those opportunities to long or short, various indices, commodities, topics. So again, if anybody in the chat has a particular topic, commodity you'd like to look at, please throw that up in the chat and we'll try to take a look at those. Just a quick reminder, if you'd like to get 24/7 access to our ETF Google Sheet, which we use to identify ETFs to take advantage of these opportunities and trade ideas that we identify, you can get access to our ETF Google Sheet as well as our dividend payers and our puts ROIC options sheet and our watch list by joining our Patreon at the All Access or VIP level. So again, this is what we use to try to look for opportunities to use ETFs to take advantage of those trade ideas. One new one I want to quickly look at in our ETF research sheet. This one came up. I also want to show you. Hopefully it's still there. One of the things I do at the end of the day is I go through and look at the double bottom and multiple bottom tickers in on the main page of FinBiz. So I quickly look through these. Maybe I looked at that one, they lose money, etc. I'm familiar with those guys, they lose money. So this IDX popped up as an ETF on Indonesia, and I hadn't heard of a ETF on Indonesia, so that's a Southeast Asia. I thought that'd be interesting. We have several on Vietnam, India, China, etc. But I thought this would be interesting to take a look at. So I did the research on IDX in the research sheet in our ETFs Google sheet. So we can take a quick look at that. Also, I can pop that up in FinBiz. So here in our research tab, you can see the current price. I identified the support and resistance levels. You can see the current risk reward profile is pretty attractive if you want to do a short-term swing up. From a 52-week, it's not all that exciting, but from a top to bottom, it's got a nice risk reward profile as well. You can see it's, relatively close to its 52-week low and this support level. So if we see there's that multiple bottom at 16, looks like it gets pretty good support off of that, bounces up. It looks like, it's in a narrowing channel, narrowing wedge. Does pay a small dividend. It is not optionable. Doesn't have a lot of volume, and there's some issues, some risks with these ETFs that, don't have a lot of volume, are kind of choppy. So just be aware, and I'll talk about some of those risks potentially again tomorrow. But if we zoom out on this a little bit, see in the past, it's been up in the 22s. We go farther back, had the big dip in 2020. Down to 12 or so, been up in the 25s, back farther to 34. So, it looks interesting. I wanted to add that in our ETF sheet. We can also see what it's comprised of, both in FinViz and in the ETF database. So we see finance, non-energy minerals, process, utilities, etc. Looks pretty broadly diversified, not a lot of tech, so it's light on tech right now, more finance, industrials. There's a big financial center in Kuala Lumpur. So Bank Central Asia, so banks. So you see it's top 10 holding, a lot of banks. So one miner, one technology. So also if we look at it in the ETF database, so again, you can quickly access these profiles via the links to the ETF database and to the FinViz in our research tab in our Google Sheet. So emerging markets of Indonesia, etc. Broad base, vanilla strategy, market cap weighted. Again, if we look at the holdings, we'll see some, very similar banks. Looks like, again, mostly banks. So again, I thought that was interesting, and if we start to hear, some again companies moving out of China due to political risks in China, they have been moving to Vietnam. I'll throw out again. I don't tend to be political, but let me throw out my 2 cents. Again, not financial advice, but in my humble opinion, moving out of China due to the risks of POC, the communist um, government in China, and moving to Vietnam, which is another communist country, pretty much controlled by China, I think is risky and probably not wise. So I think these companies moving out of China and moving to Vietnam, that might not be the best idea. I think you're assuming very similar risks there. Again, I could be wrong, not financial advice, but that's my humble opinion. So potentially, if we start to hear companies moving into Indonesia, this IDX might be an ETF that we might want to take a look at going forward. So again, now we can find that in the research tab in our ETFs Google Sheet. We can keep an eye on that for opportunities in Indonesia. So I hope that helps. I thought that was interesting. And let me know what you all think. Have you traded anything in Indonesia? What do you think of that as a market? Any particular stocks? I, again, thought that was interesting. So very quickly, we'll whip through some ETFs. So we've got a couple in our Google Sheet if you want to play the, defense, the pop in the defense stocks due to the increased global tensions in the Gulf. We've got DFEN. We also have ITA in our research tab. Again, DFEN tends to have a better risk reward, but again, you can find, do a search for, defense, and you can find several ETFs. The main one we watch is DFEN. You can see it's, relatively high right now. So it's, pretty close to its 52-week high. So again, all the technology components, we've got long and shorts for those. So the one we watch in the screeners is ARK-K and TQQQ, etc. So you can find the inverse of those in our ETFs Google Sheet. So SARK on that, Lab U and Lab D. We saw BITI, so the short on Bitcoin. So this is a way you can short Bitcoin without trying to short the stocks or shorting the individual ETFs. And you can long, although I think the other ETFs are longing now, probably more popular. Been watching some of these other countries, Brazil, etc. Yin and Yang for China, or C-Web long China, K-Web long China. We talked about coal, so these are coking coal. companies, keep an eye on those. Again, we'll be talking about this. We saw, Europe looks like it rolled over. We'll see if we get a bounce. Pretty close to its 52-week high, but it did come down a little bit. So we're watching these two, EURL, actually watching EPV for the short, but watching for the top in EURL. Here's DBA. Again, Easy Mike's been talking about DBA. Again, it's pretty close to its 52-week high. It does have some longer-term room to run. So if we do see further, upswings in agricultural commodities, so again, you might want to look at the composition of DBA and then marry that with the prices of the various commodities. Gold, again, we'll be talking about GDXD tomorrow. We're already long GDXD. It looks like I was a little early, a little premature. I thought we'd get more resistance at 2,300. It broke, surged through that pretty quickly. I do think we'll get some corrections at some point. But again, the long-term trend is definitely up. So you can see different ETFs to long or short. Gold looks like dust now has become more attractive. So I know the Crow, I haven't seen him in the chat today, but I know he likes dust. We went long GDXD because at the time it was closer to its support, has a decent risk reward profile. So Japan, again, you can see the Nikkei, again, pretty much rolled over. But if you want to play that trend down, EWV, again, SQQQ to short, TQQQ to long, the NASDAQ, boil to long, natural gas, cold to short. Again, just been pretty choppy lately. Long gold or long oil with gush, or UCO, short oil with drip, or SCO. Keeping an eye on potash to see if it comes down. Again, long, short, the Russell or the SPYs. Again, I think the long-term trend is up, so I'm not too eager to short the SPYs. Although again, the Russell's going to be more sensitive to rate cuts. So if we're not going to get the rate cuts are expecting, there might be some downside in the Russell. SOXL and SOXS for semiconductors. Can also do small caps, long with TNA, short with TZA, and again, broad technology with long TECL, short TECS. Again, we've got the individual stock ETFs to trade Tesla. So if you want to long Tesla, TSLL. If you want to short Tesla, TSLS or TSLQ. And bonds, prices come down, yields go up. So TLT's been coming down. Uranium's been relatively strong. Again, utilities, although it's not really that close to its 52-week low, it's showing some possible risk reward. But again, that's going to be predicated on rate cuts as well. And they've been downtrending lately. So here's YCL, which is again the long on the yen. Again, I might have been a little bit early on this one. But again, it looked like the yen's getting a pretty stable bottom. So you see the current risk reward profile and 1.4, 1.5 for a 52-week. But again, that's a short-term swing scalp type trade. And again, wheats hasn't really come back down. It's gone up a little bit. So again, if you have any other ETFs you want to look at, you can throw those back up in the chat. If I missed it, I apologize. Welcome, Douglas PC. Thank you for joining us. Hope you're doing well. I was just going to see if I see one on coffee. I don't have one there. Let me see if I have one in the research. I don't have a specific one on coffee. So again, DBA or some of these broader commodities we've talked about. DBC is also another commodities ETF that you might use to trade general commodities. And we looked at that a couple weeks ago as well. Okay, let me grab a quick drink and then we'll quickly talk about our trends, our strategies for this week. Bank earnings start on Friday. If you go back, rewind our stream a bit and look at the earnings section, we looked at that all the big banks, well, they started the big banks start reporting earnings on Friday. I hope that helps. Okay, so our theme for this week, again, April showers in the market. So again, on Thursday, we kind of got probably our first April shower for this week. So again, increased global tensions in the Gulf, comments by Kashkari, some of the Fed officials that, we might not get as many cuts as the market expected, or not as soon as the market expected, might not get any cuts. And that caused a very significant downswing in the markets. So again, last week we looked at the seasonal trends for April, and we saw April tends to be a very good month. So it's kind of the peak of this quarter, into this quarter, or the peak of the year thus far. And then we get the sell in May and go away crowd comes in, and May is, much, much less positive. So we get a big drop off in May. So again, you can hear how the markets typically perform, best performing sectors and industries, etc. in April, in the videos linked in the description. Also, our previous discussion on trading in the spring, so in the best performing sectors and industries in the spring. So again, other than the sell in May and go away crowd, definitely a positive trend. So we get a positive trend through the end of April, drop off in May, and then a rebound going forward the rest of the spring. But we can expect some showers off and on, but the sun's going to come back out. Hopefully these April showers manifest in May flowers. So again, opportunities. So when we get these dips, we can take these as opportunities, find out things that overreact to these April showers, take advantage of those. And then in May, hopefully, after the sell in May and go away crowd goes away, we can benefit from some May flowers, as a consequence of these April showers. So I hope that all helps. Again, just another quick point I wanted to share, and I hope this helps us all make money trading, while these April showers come and go. It appears, in my humble opinion, that some of the inverse correlations that we used to see seem to be breaking down. We used to see when the US dollar went up, when DXY went up, then your dollar denominated commodities like oil, gold, silver go down, and that correlation is what one would expect. However, recently we've been seeing the dollar go up and oil, gold, silver go up. So again, right now I think that correlation is breaking down, and I don't think we can rely on that normal correlation that just because DXY goes up, these dollar-denominated commodities may not go down. So there are other forces driving these commodities. I think part of the reason gold broke through 2,300 so strongly is we've got foreign central banks buying, and I think nobody's selling. So I think we can continue to see upside in gold, silver, and silver catch-up trade on gold. So again, let me know what you all think in the comments in our Discord, etc. Do you think this correlation between the U.S. dollar and dollar-denominated commodities has broken down? Similarly with bond yields and the TLT and stocks, these are inverse correlations. Normally when the TLT, when the 10-year bond yield went up to 4.5, that caused a downturn in stocks, particularly your tech stocks, your future cash flow based pricing of stocks, discounted future cash flow. Normally, when yields went up over 4.5, that caused a downturn in stocks. And again, that hasn't been true lately. We've had TLT, the yields going up and stocks going up. So again, I think this correlation is not as strong as what we've seen in the past and would normally expect. Also, we talked about this correlation between the yen and the Nikkei. Is the yen was going down, the Nikkei was going up. Now the Nikkei rolled over and it looks like the yen's bottomed. So even though the yen has not yet gone up, we already see the Nikkei rolling over. So again, my humble opinion, I think some of these correlations are breaking down. So we want to be careful about assuming that these correlations are going to hold. So I just wanted to share that. Again, I'd love to hear your opinions as to, do you think these correlations are broken down? And if so, why? What else is driving some of the movements that we're seeing, in these various categories? So we talked about making money trading in April and the spring. Again, I continue to hypothesize. I think, again, sector rotation's the name of the game. Keep an eye on those sector rotations. Again, the tech sector in particular, I think is going to be mostly flat with a lot of chop. We still got a lot of the buy the dippers in the Magnificent Seven, in the FANG stocks. So I don't think they're going to move significantly either direction, but they're going to buy every dip. So again, we want to watch these sector rotations. Again, we'll see a rotation, out of tech like on Thursday, and then Friday, back into tech. Although, again, we saw the trend, energy moving up. Again, we're looking for a rebound in real estate when the interest rate cuts, actually do come. And then tomorrow, again, we'll look at dividend payer stocks, and we'll also talk about additional opportunities to generate income using options. So again, we saw volatilities starting to increase. So the VIX is up a bit, premiums and options getting a little more attractive. So we'll see if there's any opportunities to use that increased volatility to also make some money trading options. So I ran a little long today. If I missed your question, I apologize. And please put your question in the description box below, or again, in our Discord. Again, you can contact us, tag us in our Discord. We're BeachBum Trading, all lowercase, no other characters, numbers, pounds, etc. We also do not DM people unless you already know a message is coming from us. So if you get contacted by anyone impersonating us, please let us know. We will promptly ban them from our Discord. Again, we want to keep our community healthy and as a community where traders can participate. Again, you can participate in our Discord 24/7. So, and it's much easier for me to follow questions, comments, etc. in our Discord than in anyone else's live chat. So please, if you have a question or you want me to see a comment, please put it in our Discord. Please don't assume I'm going to be able to see it in someone else's live chat. And again, if you want me to take a look at something, do research on a stock, in preparation for our live streams, look at a dividend payer, an ETF, etc., please put that in the comments to one of our videos or in our Discord. Or you can also contact us via any of our social media sites. You can find direct links to our social media sites on our homepage, which is beachbumtrading.com, bum without the U. So again, please contact us via those means if you have any questions, comments, would like us to do due diligence or research on any stock, ETF, etc. So again, we appreciate all your participation. We appreciate you watching. Hopefully you like this content. Please smash the like button. Help us try to get the YouTube algorithm to share our content with more traders around the world. Help us continue to build our community. We'd greatly appreciate it if you'd share our content directly with your fellow traders and friends. Please repost our postings. Invite your fellow traders to come join us in our live streams and our Discord, etc. Again, we want to continue to grow our BeachBum trading community for the mutual benefit of all of our BeachBum traders. And, we need your help and your feedback on what we can do to improve our videos, our game plans, our live streams, our tools, resources, community, etc. Please let us know, what we can do to improve. Let us know what you'd like to see more of, less of, etc. And we will try to do what we can to continue to improve our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So thank you again all for joining us today and for part 1 of our weekly trading game plan for April 8th through April 12th. Hope you'll come back tomorrow, same bat time, same bat channel, 10 a.m. on Sundays for part 2. So we'll be taking all this market analysis, trade ideas, trade strategies, and selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. And again, we'll talk about and look at dividend payers and option strategies that we can also use to generate additional income while we wait for our top swing trading stocks to set up. So thank you again for watching and have a great rest of your Saturday.